Hi, everyone. Welcome to the Snowball Wealth Podcast, where we talk about how to get out of debt and start building wealth, especially if you're the first in your family to do so. My name is Tanya Menendez, and today on the show, we have CEO and co founder of Sequin, Vrinda Gupta, on the show. After working at Visa for several years and building the Chase Sapphire Reserve card, she was rejected from the card she helped design. And now Verinda's on a mission to address gender inequities in credit and finance through her company Sequin. Welcome to the show, Verinda.
Thanks so much for having me. I'm really excited to be here.
Yeah, and to start, would love to hear you, share, a bit about your pathway and what Sequin does.
Yeah, for sure. As you mentioned, I started off my career at Visa, and I was really excited to start working in financial services as my first job out of college because I and my family are first generation immigrants to the US. And so growing up, I watched my mom really struggle with the financial system and always feel just less when it came to finances. And for me, working in the financial services industry was a way to break that generational money trauma, especially as it related to the women in my life. And so, started off at Visa, worked there for a few years, worked my way up the ranks, and had an opportunity to design an amazing credit card called the Chase Sapphire Reserve. And I was super excited to apply for the card like everyone else. And I applied and was rejected.
Mm.
And I realized at that moment that I had just never been taught about the financial system. I had no idea how to build credit. I didn't realize that the bulk of my credit history was under my father's name versus under my name. And I didn't know how to start building it. After I got rejected, I had no idea what to do, right? I had no idea, okay, where do I go to build my credit? What does this mean? Am I out of the financial system forever? Am I just like forever rejected? I had no idea. And so I just realized that looking at visa data, looking all around, reflecting on my own experiences with watching my mother, I realized that disproportionately women were having negative outcomes when it came to financial services. And that was around credit, whether it's getting rejected more often,
Mhm.
having more debt, credit cards, and other, making avoidable financial mistakes like paying late fees or paying overdraft fees, and just generally not knowing much about the system, but to no fault of our own. And the other thing I learned along my exploration was that women could be rejected from debit cards, bank accounts, business loans until the 1970s, which really wasn't that long ago. And still, we haven't made much progress when it relates to true financial inclusion and true feeling really included in a very important system in our lives. And so, I left Visa to pretty much work on this problem because I realized, no one else is talking about this. And especially as it relates to the products themselves, I had this amazing background coming from Visa. And I just thought, if I could just help women understand the system better, but also give tools and services that make navigating the system better and make it less opaque, then that could really move the needle for a cohort of people I love, which is, other women. So that was kind of the origins of what is now Sequin.
Yeah, and I love actually chatting. I wanted to actually bring that up too, the history around women and credit. And it really isn't too long ago where women couldn't get their own bank accounts or their own loans. And I was actually on a tour in London at Bletchley Park, and they were saying that 75% of the workforce were women, but they were paid like two-thirds of what men were getting paid for the exact same job. So this has been going on for decades,
Mhm.
right? And I think it is very historical that this is happening. But would love to hear more about what the historical piece around this too, and like what you've seen in all of that too.
Yeah, absolutely. So, starting from everything we just talked about, right? Women just being actively excluded from this financial system that we're all a part of and need to be a part of in order to reach opportunities. And, some of the interesting and not so fun facts of it all is it became illegal to reject someone from a bank account, credit, from, financial tools based off demographic info and gender of
Mhm.
those. And what's happened is people just kind of say, "Oh, it's illegal, so there must not be a problem." And I think
Mhm.
other, social issues that were once illegal and are not now illegal, it does not mean the
Mhm.
problem is solved, right? There's so much
Right.
around just the entire the systemic issues around all of it. So now, what we see is women are so much less likely to have conversations around finances and money as
Mhm.
compared to our male counterparts. But it's not that we don't want to talk about that stuff. It's that the way that, it starts early, the way that parents are talking to little girls versus little boys around finances is vastly different. And little boys are actually twice as likely to have gotten a lesson on credit and finances by the time they
Wow.
reach high school as compared to little girls. So we're not even really having those conversations. And
Mhm.
pieces are even looking at media, only 1% of women's content is financially related at all versus, banks are spending 33 times more advertising to men than they are to women. And so,
Mhm.
all of these things come together and make you feel like, if I'm on Investopedia and it's a bunch of guys that I see, there are these subliminal and not so subliminal messages that, well, maybe that's the type of person who would talk about finances as someone who looks like this.
Mhm.
And so I think there's so much power in having those conversations and also understanding where to get credible information and where to go, because unfortunately, there is a lot of misinformation out there and there is a lot of, um, just like too much information too, right? Very jargon filled
Yeah.
information and not knowing just how do I take that? How do I know what's credible? What is relevant to me right now? And how do I actually move forward in an actionable way? So anyway, we got here in kind of a convoluted way, but yeah, I mean, the
Mhm.
history of it all really means that women are trying to navigate a system that was designed to leave us out of the narrative. So if we're making
Mhm.
mistakes, that's not really our fault. It really is, the system that we're all trying to partake in.
Exactly. And I love that, you started Sequin. And I think we have a similar mission where we know it's almost a sentiment that like no one is coming to save us. So we have
Yes.
to start creating the solutions that we want to see in the world. And that's why I love that we both share a similar mission in that. And that's why I'm excited to have this conversation. And I think that, we chatted a little bit about, the systemic issues that have been, you know, going on for decades that have been holding women back financially. But at the same time, women are enrolling in college at a faster rate than men. They've been outpacing men in college enrollment. And they also have all this spending power. So, what do you see as like the opportunity for women on the other hand, and like why you're building Sequin? And it's probably similar to some of the reasons that why we started Snowball. But yeah, I would love to hear some of that too. And like, the more inspiring part of like women's opportunity and potential.
Yeah. Yeah, absolutely. So around the time where I started thinking about Sequin, before it had a name, it was basically a problem to be solved, right? Women have all of this spending power. Women, for the first time in history, to your point, are highly educated, are in, the
Mhm.
workforce in rates that are unprecedented. And if you look at women's spending power, it's actually the largest of any demographic ever, where women are controlling an estimated 85% of GDP. And so our spending power is incredible. And so around that time, after I left my job at Visa and was getting my MBA, I just started looking around and Time's Up was happening, Me Too was happening. And it just felt like this shift in society where it was like, yeah, women are saying, like, the things that we've been subject to thus far are not okay. They were
Yeah.
never okay. And now we're actually going to say something about it. And I thought it was so incredible to see women stepping into our power, into our financial power. There is a lot of, we're not going to be supporting these specific brands because it stands for something
Mhm.
we do not believe in. And it was just so fascinating to me to see just women coming together and being like, no. And I thought that was just so cool. And I was looking around and I didn't see, many financial services or even just financial information geared towards women. There were, a few at that time, and it's, one of the reasons I love what you and Snowball are doing as well, because there is a bit more of the conversation, but we're still at the very tip of the iceberg on who's talking about this. And so, there are
Mhm,
amazing books like Invisible Women, for example, where they
mhm,
talk about the fact that we live in this world designed for men where women are more likely to die in car crashes because seatbelts are made on men's bodies and pharmaceuticals,
mhm,
etc. But no one was talking about finances, and to me it was the exact same thing. And so it was something that was very exciting, where we're in this very cool period of history where women, yes, are educated, have
mhm,
an incredible amount of spending power, but I think more importantly are aware of how important it is to be financially independent, financially
mhm.
empowered, and just understand this system, with kind of this newfound money that we as a cohort have had for that we have for the first time in history. So it feels really exciting to be able to be a part of this movement that is financial feminism.
Yeah, yeah. And, getting into more of the nitty gritty, like what are some pieces of advice that you and Sequin share that can help women move forward? Like if you were to think about the top pieces of financial advice that you commonly share and that people need, what would you how like what are some pieces that you could share with us today?
Yeah, absolutely. So the first thing we always say at Sequin is making sure that you are building credit in your own name. And what we see is women disproportionately have the bulk of our credit histories be made of a parent or a partner's credit history. And
Mm,
at best, that means that you are, someone else might be the reason that your credit history is good, right? But what ends up happening is on the other side, let's say that person doesn't know how to be managing their credit
mm,
correctly, and then you are at the mercy of their behaviors. Or if let's say a marriage dissolves, you are left with no credit history. And credit
mhm,
history really is just opportunity and being able to protect yourself to access financial services that you need for most of your life goals. So, building credit in your own name responsibly always is one that we always say. And then the second is having a bank account of your own at all times, whether that is,
mhm,
when I went to college, for example, my parents got me my first bank account, and that was truly my own bank account. And I see so much where that's not the case, right? Your parents are still involved in it, or, a partner is involved. You have a joint kind of account. But what I always say is just have your own account that has your emergency fund in it, right? 3 to 6 months of money where everything goes, cards go up in the air and you're like, I just need a buffer, and I'm going to leave
mhm,
a bad relationship. I'm going to leave a bad job, and I am not going to go into debt because of that situation.
mhm.
So having your emergency fund, but also having, ways where you're saving for short-term goals, long-term goals, whether that's treating yourself, traveling, whatever that is, the wants of it all. And just making sure, you're able to just have autonomy and control of that account and to be able to remove like shame, guilt, all these negative terms we have towards money. Like that is your money. These are your decisions. So be building credit in your own name and have a bank account in your own name at all times.
I love that, and I think going more into the credit building, would love to hear. I know that there's a lot of misconceptions with credit building too. I think that sometimes people it's about like on-time payments, and I know that there's a specific rubric. Would love to hear your like best advice for building credit and like what impacts your credit score the most.
Yeah, yeah, absolutely. So, the top three factors that go into a credit score are your repayment history, right? Are you paying back? Are you paying it back
Mhm,
on time? The second is credit utilization, which is basically the percentage of your overall credit line that you're using.
mhm,
So, let's say you get a credit card, you get $1,000 credit line. On that day, you've used 100 of it, or at that point in your statement cycle, you've used 100, then your credit utilization is 10%. So credit
mhm,
utilization is a second factor. And the third largest factor is around your length of credit. So making sure that you are credit visible and that you are building credit consistently. The biggest misconception, and what we talk a lot at Sequin, is actually the credit utilization factor.
Mm.
And what we see is because one, women are getting lower credit lines because we, might not be
Um,
reporting our income, the gender wage gap, we might have more expenses just being women, whatever it is,
mhm.
we have lower credit lines on average, and we might use more of that credit line on average as well. So your
Mm.
credit utilization as a woman is disproportionately higher
Mm.
than the average man in your situation. And so what we say at Sequin is pay off your credit card every single week if possible.
Mm.
That'll keep your credit utilization low. You want to keep it at below 10%, ideally every single day of the month. That is kind of hard. So we say just do weekly payments. That should keep you at a good spot. And if you make a big purchase like a mattress or a TV or whatever it is, then just pay it off, as soon as it shows up on your statement. So weekly
Mhm.
payments is something that we always preach if possible. And uh, by doing that, we've seen an average of a 20-point credit score increase in a week. And it's the
Oh,
easiest
wow.
thing, right? You literally just log into your portal and hit pay. And of course, we know times are hard, so it might not be possible to pay it all, but try to
Mhm.
pay as much as possible and make it a weekly cadence. It's a lot easier to do weekly versus, once a month, and who knows what's going on in that situation.
Yeah, yeah, absolutely. And, you know, switching gears a bit to back to you and your story, would love to
Yeah.
hear some like financial mistakes or wins, and maybe just some stories of like things that you've learned along the way as you've been in the industry for a while.
Yeah, absolutely. I mean, where do I start? I think we talked a lot about credit, right? I think common mistakes that I see women disproportionately make are paying the minimum payment, right? That is an option, but you are paying really high interest, like on average 26 to 30% on
Mhm.
any debt that you're borrowing. So paying more than the minimum, just paying as much as possible on credit cards is super, super important. The second thing is when it relates to bank accounts, one thing that we found was women are paying 20% more on average in banking fees than men are. And it's adding
Mm.
up to around $214 a year in fees that you might not even know about. And so those include, monthly minimums, they include late fees, they include overdraft fees, just other random hidden fees that your bank might have that you just don't even know about. So just making sure that you're aware of what those fees are, and especially the ones that are, really avoidable, like overdraft or late fees, for example, just making sure you're setting a reminder and trying to budget as much as possible in order to avoid these unnecessary fees. And if there is a situation where you slip up, once or twice, just calling your bank and saying, hey, I messed up once. Can you
Mhm.
remove this fee? They'll be
Mhm.
lenient, a few times as well. So we always encourage, call the bank and just be like, hey, can you waive this one time? And that should work. So those are three of the kind of, very common things that I see. In
Mhm.
terms of wins, I mean, I mentioned, weekly payments on your credit card, 20
Yeah,
points in one week on average. We've had
that's
so
huge.
many, it's amazing. Yeah. And so many Sequin women have said in 2 weeks, their credit score has gone up 120 points. And
Oh,
so
wow.
it's a really effective, it's not rocket science. It's
Mhm.
just no one is teaching us the rules of this game, and so
Mhm.
understanding how to play the game is really important. And the second piece we hear a lot of in wins as well is, having the tools is really important, but also
Mhm.
having support and a community around whatever your financial goals are is so important. And finances are emotional, right? Every single
Mhm.
dollar you pay is aligned with a value. And so,
Mhm.
just being able to address that and not dismissing it in any way. It
Yeah.
is, it's important. It's emotional. It's the foundation of everything. So making sure you have communities and support when you have financial goals is equally as important as the tools.
Yeah, and do you personally set financial goals for you and your family, or how do you manage your own finances?
Yeah, yeah. So, recently I've been thinking a lot more about investing, but also even, putting money in a money market fund, in a Vanguard account. So, what's been really interesting right now is how high the interest rates are that you'll be able to get back on your deposits. And
Yeah.
it's really interesting because I graduated pretty much right after the recession, like the 2008 recession. And so I had never experienced receiving interest.
Mm.
On my Bank of America, I get 0.01% back on the
Yeah.
savings account. And that's what I thought was normal. But there's so many ways to optimize your finances now, whether it's, putting it in a high yield savings account, whether it
Mhm.
is, investing, even just putting it in a money market account where it's fetching whatever the Fed rate is or whatever the bank is giving you. That's something that I've been thinking a lot about, just making my money work for me, but also
Yeah.
making sure that, money for short term goals like trips coming up, or I have been having a lot of weddings the last few
Yeah.
years because of like the pandemic spillover, as I know we all are. So making sure to budget for those short term goals as well and be really
Mm.
intentional about, okay, the money that's in my checking account is kind of a glob of money. So making sure I can separate those into smaller buckets of, okay, I'm saving this amount for this specifically, and I'm not going to get tempted to, spend that.
Yeah, yeah, and, what's been one of the more surprising things that you've seen in as part of the industry? I think, obviously, one of the surprising things is that you were rejected by the car that you built, but what were some other surprising things that you found in the industry that are either historical or, like, these edge cases or these, like, weird things that are part of, like, the law that shouldn't be?
Yeah, I'm not sure where to start with that one. There's a lot of like very confusing things, but I think one thing that's been interesting, now being a part of the startup world, right? Coming
Mhm,
from Visa and coming from a very established
mhm,
financial company, it's been very interesting on the other side to understand fintech regulation and how
mhm,
important all of that is. And there's a lot going on in consumer fintech, so being able to keep the pulse on that and how it affects products and what you can build and what you
mhm,
can and can't do is super interesting. So I think that's been one. The second thing that has been consistently pleasantly surprising for me has been the support of allies as well in all of this. So, of course, like our product is open to everyone, but is really focused towards, helping especially young women just
mhm,
understand the world of finances. But so many allies just coming through and being like, this is so important. Yes, I feel like I, want to have these conversations. I want to make sure like my partner understands. I want to make sure my daughter understands. I want to make sure my best friend understands. And that's been really encouraging as well. So I think, in general, we as a society are getting closer and closer to a point where it's like when women are empowered, that is a really great thing for society. And
mhm.
it's been really encouraging.
Nice, nice. I love it. Well, I know we're getting close on time. So, is there any parting thoughts or any pieces of advice that you'd want to share with the Snowball Wealth community?
Yeah, yeah. I think, as I mentioned, community and that, all of the conversations to have around finances are really such a simple yet powerful way to be able to move just our knowledge base as women forward and being able to share our experiences in a really vulnerable way. So interesting. It's, I've talked to thousands and thousands of women at this point about just a variety of financial experiences, and so many times they'll say, is it just me? I feel so alone in all this. And I'm like, I hear this, 30 times a day, and you are not alone. So I think just removing the fear, guilt, shame,
Mhm,
all of those negative emotions around finances, and really thinking about, okay, what do I need to, really understand where that's coming from, and then figure out the actionable tools and the community that I need in order to reach my goals. I think that's something that is super super important in all of this, and is something that we don't think about. I have no idea, Tanya, the financial products you use and about
mhm,
your financial life, but we've chatted about other aspects. So I think just having those money conversations is really really important, and finding credible resources and finding tools that are committed to being transparent is really really important.
mhm. Yeah, yeah. And, to that end, what's next for Sequin? I know that today you have a debit card and a community and some resources. And I'm curious to hear what's next with Sequin and what we
Yeah.
can look out for.
Yeah, absolutely. So we have our Sequin membership, which is really exciting, and it's so much more than just a debit card and a bank account, which
Mhm,
which it is and it comes with.
mhm,
But we love our courses and our events and our community, and a lot of what we talk about as well is finding the pink tax and paying
mhm,
back some of those, you know, factors that relate to being a woman, like feminine products, health, wellness, self-care. So we have a bunch of brand partners and always onboarding more. We have some great ones like Topicals and Parade and Flex. And of course, our debit card and our checking account, we're really committed to not having any hidden fees on those.
mhm.
So yeah, we're taking more monthly members and slowly opening the floodgates on our Sequin Rewards Visa debit card. So yeah, we'd love to see, anyone who's interested there. And yeah, super excited to keep on getting the word out.
Yeah, awesome. Well, thank you so much for joining us. And for those listening, thank you for listening to the podcast. If you're interested in connecting with Sequin, you can visit sequincard.com. We'll also put it in the show notes. And if you're interested in getting started on building wealth, check out Snowball Wealth in the App Store at Snowball Wealth. Um, and I'll see you next time. Thanks so much, Miranda.
Thank you.